So this video is going to be a very detailed video here, and I'm going to be showing you how to analyze the chart here. So I'm going to be taking my time to break down how this works technically. So we're going to be talking basically about market structure, inducement, and point of interest as well. Before I go to the real chart, let me give you a very comprehensive textbook example. Then we are going to apply the same thing on the chart here. So you should already know the basics, but I'm going to just brush through the basics. Now, you understand that an uptrended market creates series of higher highs and higher lows, just like this. Higher highs and higher lows, and seeing this, we already understand that the market is on an uptrending market. Now, once you understand the trend of the market, which is the market's flow here, you want to understand exactly where the trend of the market is heading to. Is the market heading on an uptrend, or is the market heading on a downtrend, just like this? If you have a series of lower highs and lower lows, then this is basically telling you that the market is heading on a downtrending market. So this is basically the first thing you want to pay attention to when you come to the chart here, when you're marking out your structure flow or the market flow presently. So let's assume in a case scenario where I come to the chart and I see a structure just like this, creating series of highs and lows, higher highs, higher lows, higher highs, now, and higher highs, something like this. Now, since I already understand what my structure is, the next thing I want to pay attention to is my point of interest in the market. So if I have a high, I have a low, and I have another low that created a new high, this one here would be my demand level. So this would be my point of interest. There would be an order block lying down here that I'm going to be anticipating for the reversal to come back to. Let me quickly preview. The last candlestick here before the impulsive move that went ahead to break this structure would be my order block. I'm going to show you how to mark it out when we come to the real chart. So we're going to have an order block here, and this is where we had a break in market structure. Now, understanding this trend like this, all I expect of this market is for the price to come all the way down and react from this particular point and continue going back up to continue obeying the current structure in which we have currently. And the same thing also is for works for a downtrended market. So if you come to the chart and you see a market creating series of lows and high, and you've been able to correctly identify where the current structure is heading to, then you want to now pay attention to understanding where your supply level is. Now there will be an order block here, which would be the last candlestick before that impulsive move that breaks structure. You want to make sure that to mark out your order blocks or your point of interest, it would be the last candlestick before any impulsive move that broke this structure here. That is the point you'll be marking out as your point of interest, be it your supply level or the demand level as well. Now, you've understand the structure, you've understand your point of interest, where to mark out. Now, understanding these two things here, you want to now understand that the next price, what price would likely do next is reverse, come to your point of interest, react from it, and bounce back down, just like this, to continue flowing with the initial trend in which we have. Now, I'm going to give you another case scenario on how to map this out, just like this. Now, in most cases here, if you are marking your structure on the higher time frame, let's say because you want to use the higher time frame as well to have a very strong bias. Let's say you come to the 1 hour time frame to mark out all of your structures here, and you see the market do something like this, because it's going to do something like this most of the time. It creates a high, it creates a low, then from this point, let's say we begin to have a mini structure, something like this. Then it went all the way up. Now, this is where we had your break-in market structure. This level here is where we had that break-in market structure. And all of these levels here are internal structure. All of these levels are still internal structure. Now, if you check out very well here, we have a couple of lows inside of this move. Now, this is an expansion to the upside. This is one move. But inside of this move, we have a couple of lows, creating series of highs and lows just like this, yeah? Now, if you are marking your point of interest here, which is your demand level, it would still be the last candlestick before that impulsive move over here. The last candlestick would be somewhere around this zone. Now, all of this internal structure in which we have inside of this swing level here will likely going to be takeout. So when that reversal comes, the price would most likely come all the way, sweep all of this zone as liquidity, then react from there and continue going up like this. Now, when you have this kind of case scenario, you don't expect, because we're already on an uptrend, you don't expect these zones to hold. When the market gave you an expansion like this and it starts to retrace to the downside, all of this level here, we're going to have a demand level here, we're going to have a demand level here, we're going to have a demand level here, but all of this level would not hold, because the market is coming to take all of this level as liquidity. So all of those points will not hold. What will happen is that the market will just sell down all the way. So if you are trying to catch any buys from this point, you will likely just get stopped out. The market will go all the way till it take out all of those liquidity and react from the point of interest in which we have here. Then you bounce back up to take out all of the liquidity you already gathered at this point and continue buying. So this is exactly how you want to understand the market. Once you understand the market like this, then you just want to be patient to know what you are currently looking out and understand where the market is currently headed to at that particular point in time. So let's go to the trend and use different pairs as example. So if you see what we have here, we have SLM on a downtrending market all the way from this point. The market was initially selling, creating series of lows, highs, lows, highs. Then what we will have here, see what happened from here. We have this low, created this swing over here, then it retraced all the way to this level and it came back here. Then it's created another high for us going above this zone. So if I'm to mark out this zone now, this is what we have here. We have this level here. The market created another high at that level. Then it retraced all the way down. And as you can see that it now went below this level again. So let me mark that point out. It went all the way below this level over here. Now in this case, what we have here is let me give you a textbook example. Now all of this is a swing level because this is a break. Yeah, this is not the break all of this. All of this zone now, from all of this low all the way down here is a swing level. So this is a swing level in which we have here, and we have an order block resting just right here at this point. Let me go to the lower time frame so that I'm going to further explain and show you the other blocks that we have at that point. I'm going to use different pairs for illustration so that you will see. Now if I come to the 30-minute time frame, let me show you how this other block came about. Now we have a swing level here. If you can see what the market is doing all the way at this point here in 30 minutes, creating series of highs, lows, highs, lows, highs. Then the market changed structure. The market changed structure at this point here, and it started selling. And it started giving us that selling momentum. So we had a change of market structure here. We have an order block here that is here to be mitigated, and the market sold all the way to take out another structure, which is a main structure. So the market sold all the way to take out this main blue here. Then we have a retracement. Now the idea for me taking this trade, I'm going to just explain them shortly before we continue. Now we have another order block here. The market is currently on a downtrend here. If you see what happened here to initiate all of this trade, it's still using the same concept. Now you just want to flow with the current market, what's happening currently. And if you see what we have here on the 30-minute as well, we had the price go all the way to the upside. We had a high here, we had a low here, we had another high here. Then the market changed structure at this point. This change structure at this point gave us another low, and come here we have another unmitigated order block here. That was why I marked this point as entry. So if I'm to show you a textbook example of what happened here was this. The market came. Now I took this short because the market took immediately. We have liquidity resting here at this point. As the market took that liquidity, it changed structure. So I'm basically always looking for flowing with the structure or where we have a change in market structure. Immediately the market took out that liquidity and it changed structure. That was why I was interested in this sell. So after we had that change in market structure at this point, over here, this was the first low, which is the liquidity. So we had this low, we had this high, we had this low, we had this high, this low, this high, we had another low. Now I already understand that okay, the market have changed structure to a downtrending move. If it's coming back, we have an unmitigated order block here. We have inducement liquidity. So I'll just expect it to take out this liquidity and this point of interest should hold. And that was how it happened here. And sell. Now, while I'm looking out for the down profit because this is where the swing started from here. So I'll be looking out to take profits from this point. So already understand where the market is coming, that the market is now to continue flowing with the structure. The market is coming to take out these zones here. Any structure, any sales you are going to be looking out for now is a sell to come and take out this low. this low here. That's why after the market took out this low, if you understand what happened here, there was another, I saw another selling opportunity at this point. That's why I joined the market. If you see what happened there, we had a change in structure. So we have a high, we have a low, we have a high. The market changed structure, and I use this unmitigated order block as an entry. Now if you see what happened, that make me, now this is after we had this low, we had this high, we had this low, we had this high, we had this high here that did not mitigate this level. Then the market came to take out that low. Now this zone is a breaker block, and this breaker block is a point of interest. But what happened after the market take out the liquidity resting down below, the point of interest didn't hold to continue selling the market. That means we shifted structure from a downtrend to an uptrend. If this point of interest should have hold, if this point of interest should have hold, yeah, the market could have just used this zone as liquidity, expect from this zone and sell down, but it did not hold. Instead, it created this high, it gave us this low, and boom. So this now is now a valid point of interest. That's why I use that zone as my entry here. Now the market now, after respecting everything here, it now went back to react from this first order block in which we have here. Now if you watch closely what is happening again from all of this zone, immediately react from that order block. What happened? It changed structure. So it was creating a series of highs, lows, reacted from that other block. As you can see, it changed structure and keep going. We would have series. We have an unmitigated OB here, which is still, the price can still react from it in the future. So all of this OB is even important. You should be marking them out. We have an OB here that is not really mitigated. Then we saw how the structure shifted from this point, and the market started creating series of lows, highs, came back here, take out this low, then we have this break. Now we now have this point of interest here that is already yet to be mitigated, which I'm looking for to take an entry now. We have a point of interest here, we have an inducement. So what am I expecting from the market? I'm expecting, now this zone is where the market was buying, then we change structure. Once we change structure, we're expecting the market to continue selling till it will go to where we have liquidity. Once it take liquidity out, then we might consider turning with the market again. But as long as the liquidity is here to be taken out, we just keep flowing with the market. So we now have the same structure. Now we now have my POI here, and we have my inducement. So what am I expecting from this market now is for the price to go, expect from my point of interest and bounce back all the way down, all the way to the low, and just keep selling. Now let me give you a basic textbook example again so that it bring you back up to date. When you have a trending market like this, I tell you are looking for 2 points of interest, and we talked about the other block one. The other block one is located here. It's also a point of interest. Then the breaker block point of interest. So basically on a trend, you have 2 points of interest that you should be watching out for at any given point in time. Now once you have this kind of point of interest here, let me give you a more detailed or concise one. Let's say we have a highs, we have a low, we have maybe we have many structures inside. and it created another high. Do something like this and it created another high. Now, if the market structure, this is a swift leg. Now, if the market structure shifts to switch and start coming down, where is it coming to? It's coming to take out all of this low and use this point as a strong zone to buy from again, because it has taken out all of the internal liquidity that we have inside there. Push back up. The same thing also for a downtrend. So let's check that. Let's see other pairs. Let's see SRP. Let me see SRP on the 1 hour. You want to use the higher time frame to identify what the market is doing. And if you see what we have here, initially we had the market that was selling, creating series of lows, highs, low. We had this retracement, then we had the market do something like this again. So in essence, what the market did is it created a low here. It gave us this, it gave us this zone, it gave us this zone. Then what happened again? It sold all the way to this zone. Now, if you see, we have a demand zone here. We have a demand zone at this point which failed to be respected. So I already said the market has switched from that down, from this uptrend that it wanted to create back to a downtrend. Now, looking at this structure, where is the low? This is the low before we have a break in market structure all the way to the downside. At this low here is where you will look for a order block. The order block. Now, this is the last low before we have an impulsive move that broke this structure down. So this is the last low here. Then you go to a more precise lower time frame to mark out the order block that is in that low. On the 2 hours, if we are to mark it out on the 2 hours, this is it. Let's go. So let me mark it out on the, let's see, the 45 minutes. So on the 45 minutes, this is it around this point. Now, that is the unmitigated order block there, resting right there in the 45 minute zone. So I already marked the order block and keep, and know that when price gets to that level and there is a change in market structure, you should just start selling again from there. Now, as you can see, market took out all of this internal liquidity. When market reversed from this point, it took out all of the internal liquidity and went to react from that order block. Immediately reacted from the order block, then we saw that it changed structure again and start selling to the downside. Now, if you did not catch the entry from this particular point, you see what happened again from here. Immediately react to that order block. What happened? It changed structure again. It react from the order block, then it started moving downwards. Now we have an order block here that is here to be mitigated, or a point of interest here. We have another point of interest at this point. So both points of interest are valid, but I want to use the point of interest that is closest to my liquidity inducement. And which point of interest is closest to my inducement is this one. So I just expect the market to just keep going down. Take out this zone as my liquidity inducement, respect from this POI level, and continue bouncing all the way to all the way down. to take out all of this liquidity we have here. If you see, we have this structure happen there again from this zone. If you look at it critically, you see that we have this break here. Let me show you. From this point where we had this low, we had this zone, then the market broke all the way. It broke this zone to go and react from there. Now, if it's coming back again, it's going to take out all of the internal liquidity that is resting in this swing level and react from another block that is down within a demand level. So let's see where that other block is hiding, so that we already mark it out and know another possible place where the price likely react from. Let me see, maybe I'll see it clearly on the higher time frame here. Okay, I think it's more clear on the 2 hours. So I already see that we have another block here where price might likely react from. I'll just mark it out. But at this point, I already know that price is coming to take out all of this liquidity created at this low here. This liquidity, all of the liquidity. This was the move to the upside. Then when we have that reversal, it should come back and take out the entire liquidity to the downside. Just flowing with the market the same way. Let me see, maybe I see something else we could just use for an example. So basically, I think that's just how to understand the market to a certain level. Yeah. This video is already long. Maybe I'll post the other one where I'll do more chart examples to show you how to get these entries. I'll see you on the next video. You can subscribe to the YouTube channel for more content like this.